Mr. President,
Senator from Alabama.
I would ask unanimous consent that the quorum call be dispensed with.
Without objection.
And, Mr. President, I would ask consent that unanimous consent that Senator from Wisconsin and I be able to conduct a colloquy.
Without objection.
Mr. President, it's not been that long since the President's health care proposal has been passed. If we recall, it was passed on Christmas Eve after a long battle. We were told, well, don't worry what's in it. We'll have to pass it first to find out what's in it. I remember that Senator Brown was running in the state of Massachusetts, a liberal state, and he said, if you elect me, and he was running in a special election, I'll vote against it and provide the vote that kills it. And the matter was delayed. His appointment and confirmation after he'd won his election was put off, and the interim senator cast the vote for the bill, and it passed by a single vote, passed 60 to 40 to move forward. I think it was a dangerous step for America. I'm ranking Republican on the Budget Committee, and the senators are ranking as a member of that committee. And so we have serious concerns about what's in this bill. Now that we're beginning to read it, now that we're beginning to apply it and see what might happen. Senator Johnson is a successful businessman, ran for the United States Senate and joined us just a little over a year ago, and he came here to do something. I've been exceedingly impressed with his approach to business, and he's looked at these numbers and actually challenged Secretary of Health and Human Services Secretary Sebelius last week on some numbers, and the situation was quite troubling. Senator Johnson, maybe you could tell us about your concern, what you raised last week, the economic impact of what's happening, jobs on the American economy and the debt of our country, and maybe we can begin our discussion springing off from where you're coming from and what you observed from your exchange last week.
Well, sure. Well, first of all, Senator Sessions, thank you for those kind comments. You know, you mentioned that Speaker Pelosi famously stated that we need to pass this bill in order to figure out what's in it. You know, what I know you and I are dedicated to make sure that the Obama administration doesn't make sure that this law is fully implemented before we understand the true cost of the bill. We simply can't afford not to have the American people, not to have members of Congress understand the true cost of the health care law. And you know, I would just remind everybody that back in 1965, when they passed the Medicare bill, first of all, the entire bill was less than 300 pages. I think that was kind of interesting. You know, the provision that applied to Medicare alone was about 124 pages. That compares, of course, to the 26 or 2,700-page bill that the Patient Protection and Affordable Care Act was, and now there have been over 10,000 pages of regulation just trying to implement this thing. But when they passed Medicare, they estimated out 25 years and said in 1990 Medicare would cost $12 billion. Well, in fact, in 1990 Medicare cost $110 billion, more than 9 times the original cost estimate. And Senator Sessions, I'm new here, but I've been watching this town pretty carefully over the last few decades. And I don't believe Washington has gotten any better at projecting and estimating figures, particularly not on new entitlements that people want around here. They always tend to underestimate spending in order to be able to pass these things, particularly a bill like the health care law that was done in such a partisan fashion without any really support or any kind of input from our side. So the point of my questions to Secretary Sebelius last week was just trying to lay out the broken promises that have already occurred before we even really begin or have only begun to implement this law. And of course, the first broken promise that I asked her about was the very famous guarantee of President Obama that said that if he passes health care law, every single family in America will see their insurance premium, their annual insurance premium, go down by $2,500 by the end of his first term, by the way. Now, the Kaiser Family Foundation has already conducted a study and said that on average, health care premiums per family have gone up about $2,200 per year. That's a $4,700 difference in just the first 3 years of this administration, or really only 2 years after it was originally passed.
Senator Johnson, you've been in the real world, having to make a payroll and manage a company. If you as a CEO made a representation that this was going to reduce the cost of insurance for your employees by $2,000 and increase it to $2,400, I mean, that would be a stunning event, would it not? Does it bother you as a person from the real world, first time you've been in elected office, to have people walking around with numbers so divergent as promising to reduce health care costs and actually driving up health care costs?
Well, let's put it this way. Had I made that guarantee to my management, to my shareholders, and that's basically what the President did. He made that guarantee to the shareholders of America. You know, I wouldn't want to have to face the Budget Committee or the budget meeting when I had to explain away that broken promise. And that's, of course, what, Secretary Sebelius was in a very unenviable position of trying to explain how the President guaranteed a $2,500 reduction in the cost when, in fact, we've seen a $2,200 increase in those insurance premiums.
Well, you are right. I was here. It was a promise made to achieve the passage of the bill. And a lot of Americans didn't believe these promises, thought they were inflated to begin with, and this promise, a fundamental promise, has already been proven to be wildly inaccurate, and thank you for raising it.
Well, of course, that's only the first promise. I have a couple more. The administration also famously said that this health care law would now add one dime to the deficit. In fact, the original projections were that it would save $143 billion in the first 10 years. Well, thankfully, the administration has recognized that the Class Act was, as Budget Committee Chairman Ken Conrad said, is a Ponzi scheme. It simply was not financially workable. So they're not implementing it. Well, because they're not implementing it, they're not going to get $86 billion worth of revenue. So that's going to eat away at that $143 billion of deficit reduction. And then, of course, a couple weeks ago when President Obama presented his fiscal year 2013 budget, included in that budget was a $111 billion request, or I guess cost estimate, on the mandatory spending of the health care exchanges. Well, if you add the $111 billion to the $86 billion, that gives you $197 billion of reduced deficit reduction. That makes sense. So bottom line here is, I think that's broken promise number two. I do not believe in the first 10 years that this thing is actually going to reduce the deficit. And Senator Sessions, it's far worse than that. These are the small numbers. This is just the tip of the iceberg in terms of the revisions that are going to be occurring when we actually start finding out what the true cost of the health care law is.
Well, the promise was that, and it was repeated here, and the President went on national TV, I believe he said it at the State of the Union. This bill will not add one dime to the deficit. If you drop out the $80 or so billion, and he estimated that his plan, if passed, would actually create $143 billion in surplus, in extra revenue for the Treasury. It wouldn't cost anything. It would create more money. And so you lose $80 or so billion because the Class Act is proven to be the Ponzi scheme Senator Conrad said it would be. And we just saw in the President's budget a request for $111 billion more for the exchanges. Well, that already wipes out entirely, does it not, the promise that it wouldn't add to the deficit. Before the bill's even implemented, really, the projections are that it would cost money rather than make money for the Treasury. Is that your analysis so far?
Exactly. That's broken promise number two. And, of course, broken promise number three is also very famously, this President said, if you like your health care plan, You will be able to keep your health care plan, period. No one will take it away, no matter what. Now, there's a couple pieces of evidence that prove that that also is a broken promise. First of all, the CBO, in its initial cost estimate of the health care law, estimated that 1 million people would lose their employer-sponsored care and be put in the exchanges. So right away, by the way, that's a gross underestimate, and we'll talk about that a little bit later. But also just the fact that the Department of HHS has granted 1,200 to 1,700 waivers from basically some of the requirements of the health care law also indicate that were it not for those waivers, basically employers are saying, listen, we need some relief here. Were it not for those waivers, my concern would be, I think this is probably pretty true, is that those employers would probably be forced to drop coverage. And that those waivers cover about 4 million Americans. But let me describe a little bit why I believe the million-person estimate is so understated. There have been surveys of employers conducted now in the last year that prove or that indicate that employers, when they take a look at the whole cost equation of the health care law, 30 to 50% in one survey conducted by McKinsey & Company of employers, when asked, plan on dropping their health care coverage shortly after implementation. Now, Senator Sessions, if that were to happen, 180 million Americans get their care through an employer-sponsored plan. If 50% drop coverage, that could mean 90 million Americans, not 1 million, 90 million Americans could lose their employer-sponsored care and then get put in the exchanges. And we're trying to work with the CBO to find out exactly what that would cost. But in their initial estimate, they estimated it would be $7,000 average subsidy per person in the exchange. Now, if you deduct for the $2,000 penalty and the deductibility of the health care costs, that subsidy could range anywhere from $4,000 to $5,000 cost to the government. Times 90 million people, instead of $95 billion a year, Senator Sessions, the health care law could cost us close to $500 billion if 50% of the employers drop their coverage. Now, this is incredibly scary. I mean, and you're fully aware. You've been a real leader in terms of our debt and deficit issue, how, like Admiral Mullen said, it's the greatest single threat to our security is our national debt and deficit. We can't afford increasing our deficit on an annual basis close to $500 billion. If everybody were to lose the coverage, which, by the way, is exactly what I think this plan was designed to do, lead to a single-payer system, which is what President Obama really, I believe, wanted, that would cost us close to $1 trillion a year. I mean, that represents a deficit risk that will just absolutely ensure the final bankruptcy of this nation.
Well, Senator Johnson, you have been talking about this issue for some time, and it looks like reports are coming along to validate your concerns. But the administration estimated only 1 million would go into the exchanges. And these are the areas where if you don't have employer-based health care, the government will subsidize your health care program for you. And it costs the Treasury money. This is how we get in financial trouble when we make bad estimates. You think that the numbers that go into the exchanges could dwarf $1 million. How many could it be based on the reports that you've seen?
Well, I worked with former CBO Director Douglas Holtz-Aiken trying to look at the numbers that are presented. We don't have enough. We don't have enough information, which is why I'm very grateful for the fact that Director Elmendorf recognized the fact that there's some credible evidence to cause the CBO to reassess that estimate of 1 million people. So they're working through those numbers right now. Hopefully they'll give us a very full accounting of that in the next couple of weeks. But the work I did with Douglas Holtz-Aiken showed that if 90 million people get put in those exchanges, it could cost over $400 billion a year.
That's astounding.
It is astounding.
For example, $400 billion a year over a 10-year window would be $4 trillion. And the Budget Control Act that we worked on so hard last summer that the President's already undermining, but if it were to take place, would only reduce spending over 10 years $2 trillion. And this would be an unexpected $5 trillion, $4 trillion added on top. of that, would it not?
Exactly. And
It's not baked into the numbers now. We're not assuming it's going to be $4 or $5 trillion more health care cost under Obamacare. We're assuming only one, I guess.
And unfortunately, we're not even owning up to the current deficit projections. And we're not seriously addressing that. So nobody really wants to take a look at the danger inherent in this. And, of course, the administration doesn't want to talk about it or admit to it because they want to go full speed ahead and make sure that the health care law gets fully implemented so that we will not be able to reverse it. And that's the main point here. It is time to put the brakes on the implementation of the health care law before it bankrupts this nation. We simply can't afford to fully implement it to find out what the true cost is. It would be disastrous for our deficit and debt.
Well, Senator Johnson, is it too late? Is this a fait accompli, this health care law that was passed? Can we not reverse it, or is it, in your opinion, practical at this point for us to pull back from this path? It's
essential that we pull back. It's essential that we put the brakes on this. And I guess we can all keep our fingers crossed and hope the Supreme Court rules the individual mandate unconstitutional and that there is no severability clause, so the entire law is repealed so that then we can actually fix the problems in the health care system with patient-centered, free market-based reforms. That's the way to really address this.
Well, you raised these issues with Secretary Sebelius last week in the committee, and the thing is, the exchange has been on the TV and on the web, and it's become a bit of a sensation, really. People have been looking at it, and it's been very troubling. Would you tell us what troubled you about Secretary Sebelius' answers or lack of them, and what do you think we should do next?
Well, again, if I'm an accountant. I've been in hundreds of budget meetings, and when you're presenting your budget to the Budget Committee, you're armed with the information. You're ready to answer questions. And I was surprised that the Secretary was unable to answer the questions, and really, particularly when I mentioned the waivers. She seemed to have no idea what I was talking about. Now, it's her agency. It's her department that is actually granting those waivers. So that troubles me. So, I appreciate the fact that you've offered, and we've sent a letter to Budget Chairman Conrad requesting, and to be fair to Secretary Sebelius, to give her a chance to be fully prepared, to come before us and explain what is this $111 billion in additional requested funds for the exchanges. And really, I'd like to really dig down and really talk about this million-person estimate and what is going to be the effect if the administration's wrong, if CBO has been wrong in the previous estimate, and the McKinsey study is right, and half the people very quickly after implementation get dropped from their employer coverage and get put in the exchanges. What is the effect of that going to be on our budget? I'd love to give, I think it's appropriate to give Secretary Sebelius the opportunity to come before our Budget Committee and have a fair exchange in terms of explaining those parts of her budget.
Well, $111 billion error is a big deal. If you think about it, we brought in $2,200 billion, $2,200 billion. This is $100 billion, about 5% of the entire estimated revenue that we had in the government last year. To miss that on one part of one bill is very troubling to me. We're fighting every day, wrestling with a highway bill. We came up $2 billion short over 2 years. And when the whole bill is held up and votes on it, points of order raised about it, and here, blithely, into the President's budget comes another $111 billion. I'm sure that there can be some explanation for it, but I really do think the American people, don't you, are owed a prepared secretary before the Budget Committee that could lay out explanation for what this is, so we'll know how much over cost we already are on this plan.
It's $100 billion here, $100 billion there. It starts adding up to real money, doesn't it? And one thing I'd like to point out too is, so that people don't think that this 90 million people getting dropped from their employer coverage is a fantasy. It's not. It's very realistic. Let me explain that. I bought health care for the last 31 years. And the decision employers are going to make is going to be actually quite easy. It's not going to be a complex financial decision. Employers are going to be faced, because of the health care law, they can say, okay, I can pay $15,000 for family coverage, or I can pay the $2,000 penalty. And because of the health care law's subsidies, you're not exposing your employees to financial risk. You're making them eligible for huge subsidies. If a household earns $64,000, they'll be eligible for a $10,000 subsidy through those exchanges. Now, I know that probably sounds pretty good, but the problem is when we're already running $1.3 trillion a year deficits, we can't afford to add another $500 billion per year to those deficits if that were to happen. We simply can't afford it.
So your employer, you've got employees, and you've been helping them, you've been providing health coverage, and you realize I can cancel my employer contributions, let the employee go to the exchanges, and they'll be subsidized by the American taxpayer.
And
where's the money coming from that will provide the extra money they'll need to get full coverage?
And if you don't drop coverage, you're denying the people that work with you the chance of taking advantage of a $10,000 subsidy. I mean, we have created an incentive in this health care law for employers to drop coverage and for the people that work with them to get their coverage through the exchanges at high levels of subsidy. We've created that incentive. And when government creates incentive, when government dangles a huge subsidy in front of people, we know what happens. We know the history of that. People take advantage of those subsidies, and that's my concern.
What about a new business, some small business that starts up, and they're thinking about whether or not that they're going to provide health care for their employees, and they have the option of the exchanges? Do you think a new business would be even more likely to not provide coverage and let the employee go to the subsidized exchange?
Sure, because they know their cost is going to be $2,000 per employee. But, you were telling me a story earlier about some employers in Alabama that simply, because it's a low-margin business, they simply can't afford to offer health care. And the result of the health care law, I mean, why don't you tell the story?
Well, I had a number of people in a meeting I was at to explain the realities of it, and they told us that the whole fear of regulation and the health care bill and the revenue that's going to be extracted from them to pay for it would result in lesser employees and making it impossible for them to provide the coverage. So one told me that they could lose as many as 70 employees. I remember that figure.
Yeah. So again, this law will cost jobs. It's going to blow a hole in our deficit, and we haven't even talked about the quality aspect, how it's going to harm our health care system. How it will lead to rationing, how the type of medical innovation, you've heard the story about my daughter. These marvelous surgeons that when my daughter was first born with a serious congenital heart defect, one of these wonderful human beings came in at 1:30 in the morning, saved her life, and then 8 months later, when her heart was the size of a plum, they reconstructed the upper chamber of her heart. So now her heart operates backwards. Okay? We are going to, those types of innovations that saved my daughter's life, we're going to limit that innovation. We're not going to have that type of advancement in medicine if the government takes over control of our health care system. So that's, the budget is, the effect on our budget, the uncertainty in terms of how it's going to destroy, explode our deficits, versus how the harm it's going to cause the quality of care, lead to rationing, lower innovation. I mean, when it's all put together, I think the greatest single priority we have to have moving forward here is we have to make sure that this health care law that the brakes are put on it, that it is repealed and, again, replaced with patient-centered, free market-based reforms.
Well, it's not fully implemented yet. There's a lot of opportunities for us to get off this train before a disaster occurs. I truly believe it. It's just not too late for us to alter the course. And I think the American people have never been happy with it. They've been told that they wouldn't have to give up their health care, They were told it was going to bring down the cost curve and reduce the cost, and they were told it was going to pay for itself. It would be more money coming in than the bill would cost. Would you say all three of those promises have now already been proven false?
Absolutely. Look at the name of it, the Patient Protection Affordable Care Act. I mean, it's not going to protect patients. If we're going to lower the quality of care, if it's going to result in rationing, if it limits innovation, how does that protect patients? And Affordable Care Act, I mean, you just ticked off the three reasons that it's not going to be affordable. It's going to drive up costs. It's not bending the cost curve down. It's a fiction. I mean, the health care law is a fiction, and I'm so appreciative of your efforts at, again, making sure that before this thing is fully implemented, you know, we both are dedicated to make sure the American people fully understand the full, true cost of this health care law, both on quality and the effect on our budget.
Well, I'll just add one more thought to the cost. And I've looked at this very carefully. December 23rd, the night before the bill passed, I got a letter back from the director of the Congressional Budget Office, who also had stated it would create a surplus in the bill of $143 billion based on conventional accounting procedures. And I asked him, were they not double counting the money, about $400 billion? Were they not double counting it as income to Medicare and counting it as money available to fund the patient's bill here, the President Obama's Obamacare? Weren't they using the money twice? Think about that. Here we are on the eve of a vote, December 23rd. The vote's tomorrow morning, December 24th, and we're not agreed on whether the money has been double counted. And he wrote back and said it's being double counted. Quote, although the conventions of accounting might suggest otherwise, close quote. The way they scored this bill was carefully done by experts to get the score that they got, that it would make a surplus of $140 billion. But the money was Medicare money. They raised taxes from Medicare. They cut costs from Medicare. It created some money on Medicare. But the money was borrowed by the U.S. Treasury and spent on this new program. The money is owed to the Medicare trustees, who are trustees by law. They're holding debt instruments from the United States, but because it's an internal debt, it doesn't score. Now, that may be complicated, but it's not. Trust me, they borrowed this money. And sooner or later, when Medicare is going into deep financial distress, is going to call their bonds from the Treasury, and the Treasury is going to have to pay it, and they're going to borrow the money on the open markets, what they're going to do, so they can pay the Medicare trustees the money they borrowed from them. This is not a good way to do business. And so that's just one of the additional problems we've got with this. But Senator Johnson, thank you. Thank you for focusing on all of these issues, but particularly for raising the cost of the exchanges, because that, by any estimate, wouldn't you agree, is a dangerous number. It could surge above the number we're at. I think, don't you think most any person, even if they thought it would be $1 million, 1 million people, would have to admit it could be 5, 10, or 20 million people? Nobody knows for sure.
Exactly. And that's why I'm so thankful that CBO Director Elmendorf understands that there really is some pretty credible evidence to have the CBO revisit that estimate. I spoke with them last week. It looks like they're working hard to provide us that information. I'm looking forward to seeing that and see what their estimate, their revised estimate is for the number of people losing their coverage, but even more importantly, to figure out what that per-person cost is. I mean, maybe we won't agree. I mean, he might do a very economic analysis, and certainly somebody like myself who actually bought health care understands the mindset, the decision of an employer. But even if we disagree in the number of people, if we have that total dollar amount cost per person in that exchange, we'll be able to show that to the American people. So if he comes up with X and I say, no, it's really X plus 30, 40, 50 million people, then at least the American people have that information and they can judge for themselves what they think the realistic estimate is for people losing their coverage and getting their insurance through the subsidized exchanges. Information is what the American people deserve, and that's why I'm so appreciative of your efforts, and I know you're going to be, just with me, making sure that, again, we know what the true cost of this health care law is before we implement it.
Well, we've got to know that. We have a responsibility as representatives of the people to understand, are we talking about another $100 billion in cost over just 1 year's time that we weren't expecting? And I believe that the Budget Committee is a good forum to have that. I know you and I serve on that committee, and I hope that Senator Conrad can agree and would agree to give Secretary Sebelius an opportunity to state her view of the situation. I just have to say, I'm more and more convinced that we cannot afford this health care bill. We cannot afford it. We just don't have the money. We just don't have the money. I think it will damage health care. But we've had a lot of debate. Experts test us that and reduce the quality of care in America. But what I'm saying to you is we can't afford it. And it threatens the financial viability of our future. We need to save Medicare and Social Security, the programs we've got. It would be a terrible tragedy if we start off on another program. Like you talked about Medicare 30 years ago, 40 years ago, it's surged way beyond any estimate that would ever expect in terms of cost. If we start on another program, I don't see how this country can sustain it. The entitlements that we have today are now taking up about 60% of the entire budget of America: Social Security, Medicare, Medicaid. Over 50%, almost 60% of our entire spending goes for those three programs. To start another massive new program when those are all unsound financially and in crisis and need to be fixed is the height of foolishness, in my opinion. And I hope we can have a good hearing. Thank you for your leadership and great addition to the Budget Committee. And really thank you for spending hours digging into these numbers, bringing your business and accounting skills to bear, and let us lawyer bunch benefits from somebody that can actually add and subtract, I got to tell you. So,
thank you for your leadership.
Mr. President, I yield the floor and note the absence of a quorum.
We'll call the roll.
Mr. Acosta. C-SPAN 2 is live on the floor of the Senate as the quorum call continues here. Work later today will begin at 4 o'clock Eastern, about 16 minutes from now. Senators are going to take up the Transportation Projects Bill, which they hope to have done by the end of the week. 22 amendments are pending on that bill, 18 of which CQ's Senate Watch reports as germane to the two-year, $109 billion measure. House Leader John Boehner expects to bring up the Senate bill or something like it in the House. And just to let you know, later tonight on our Road to the White House political coverage, Rick Santorum and Newt Gingrich will be making an appearance together at a Republican Candidates Forum in Birmingham, Alabama. We'll have live coverage of the event starting at 6:30 p.m. Eastern. That's going to be over on our companion network, C-SPAN. The Alabama primary is tomorrow, along with Mississippi, and Hawaii and American Samoa hold caucuses.
President.
The Senator from Arizona.
Mr. President, I ask that further proceedings in the quorum call be dispensed with.
Without objection.
Thank you, Mr. President. I come to the floor today to respond to some arguments made in a recent opinion article by the Chairman and Ranking Member of the Senate and House Budget Committees, respectively. It's entitled, GOP Budget Attacks Misguided. The crux of the piece is that President Obama has made great progress in improving the economic outlook, and it would improve even more if only Republicans would embrace his policies. The first set of claims I want to respond to relate to the strength of the economic recovery. The authors write, quote, "We've come a long way since the peak of the recession thanks to actions taken by the Obama administration. And we've had 23 consecutive months of private sector job growth," end of quote. Well, to start, I don't think that the 12.8 million unemployed Americans would agree that we've come a long way. Indeed, it's been 2.5 years since the recession technically ended, and we're still experiencing the weakest recovery since the Great Depression. Growth is anemic, and there are 700,000 fewer employed Americans today than when President Obama took office. Though it's been 3 years since passage of the stimulus bill, unemployment has been above 8% for the last 35 months. Remember, this legislation was sold as a way to keep unemployment below 8%. These are some of the signs that actions taken by the administration are not working to get Americans back to work or improve the economy. Now, regarding the claim that America has had 23 consecutive months of private sector job growth, the President's been citing this number on the campaign trail and averring that 3.7 million jobs were created during that time. But the claim doesn't stand up to scrutiny. Those who cite it don't account for the role that new workforce entrants play in employment statistics. Economists generally agree that for employment to hold even, about 150,000 jobs must be created each month to employ new entrants into the workforce. These people include those who've recently concluded military service or family obligations and recent graduates. If you multiply 150,000 by 23 months, you get about 3.45 million jobs. That means that even by the administration's own figures, only about 250,000 new jobs have been created in roughly 2 years. Moreover, according to the Bureau of Labor Statistics, the net positive increase in payrolls was above 150,000 during just 9 of the 23 months to which the President referred. So yes, it would have been nice to have 23 consecutive months of private sector job growth, but that's not really what happened. Again, you need 150,000 just to stay even with the new people entering the workforce. And in only 9 of these 23 years did the economy produce that many jobs. The second set of claims I want to discuss relate to supposed blame on Republicans for the debt and the hampering of a stronger recovery. The authors of this op-ed claim, and I quote, that while the deficit has remained high over the past 3 years, that is largely a result of the policies of the previous Republican administration, end of quote. Now, let's take a look at the actual deficit numbers. Labeling the last 3 deficits as high is quite an understatement. According to President Obama's own budget numbers, in 2009, the deficit was $1.4 trillion. In 2010, the deficit was $1.3 trillion. And in 2011, it was again $1.3 trillion. The deficit this year is expected to top $1.3 trillion. At the end of the budget window, in 2022, the deficit is projected to be $704 billion. The highest deficit under President Bush, $458 billion in 2008. Every deficit under President Obama has been almost 3 times that figure, more than double. But President Obama shouldn't be accountable for the debt problem? How does that work? The President and his supporters like to point out that the budget contains $4 trillion in deficit reduction over the next 10 years. But most of this reduction is based on new taxes and gimmicks, such as alleged savings from actions that Congress has already taken or from ending operations in Iraq and Afghanistan. As a U.S. Today editorial noted, and I quote, "The budget relies on gimmicks and avoids some of the problems instead of tackling them. Most glaringly, Obama takes credit for about $850 billion in savings from winding down the wars in Iraq and Afghanistan, which were paid for with borrowed money in the first place," end of quote. So these were not actual savings. The Committee for a Responsible Budget put it this way, quote, "When you finish college, you don't suddenly have thousands of dollars a year to spend elsewhere. In fact, you have to find a way to pay back your loans." Now, regarding the supposed problem of Republican resistance to demand-based policies, there's a major misconception that consumption fueled by government spending actually creates jobs. This is the stimulus myth. It doesn't. It just inefficiently moves money around from one pocket to another, or one taxpayer to another. And that helps explain why the stimulus failed. If Americans can't spend enough money to stimulate more demand, how can the government accomplish that for us? It's our money that's being spent. Simply put, demand policies don't work. There have been ample opportunities to prove otherwise in recent years. Let's remember the President got everything he wanted from Congress during his first 2 years in office. He's been in office a little over 3 years. The first 2 years, there was a Democrat House and a Democrat Senate. The 111th Congress passed all of the demand-based policies he asked for: spending, temporary tax credits, tax holidays, the stimulus, and yet here we are. A better idea is to encourage economic activity and greater opportunity through the supply side of the economy. That means reducing government consumption of taxpayer dollars and not raising taxes on anyone, especially job creators. And that brings me to the third set of claims, involving the notion of balance. The authors claim that the budget calls for a balanced approach, with everyone sharing responsibility for deficit reduction. They also note that balance is missing from the GOP approach. Well, balance in the Obama budget, of course, means higher taxes. So I ask, how is it balanced to tax job-creating small businesses even more than they're being taxed today? According to the Joint Committee on Taxation, nearly 750,000 flow-through businesses, these are the small businesses, the businesses that pay their taxes as individuals, nearly 750,000 would be subject to the President's proposed tax rate hikes that would take effect on January 1st of next year. A quarter of our nation's workforce depends on these employers for a paycheck. According to the National Federation of Independent Businesses, up to 25% of the workforce is employed by businesses that will be affected by the President's proposed tax hikes. Now, perhaps job growth is so slow because these job creators are skittish because they don't have certainty, and they certainly haven't for a long time. In fact, the only thing they can see is the President's attempts to impose more taxes on them. The specter of tax hikes has loomed for years and has inhibited job growth. And if the tax increases actually occur, you can be sure that, any economic growth that we might be perceiving will be killed. Finally, the authors claim that the President has demonstrated that he was willing to go the extra mile to reach a bipartisan deficit reduction agreement, end of quote. Well, I'll note that the debt talks fell apart last summer because the President dug in his heels, and he insisted on harmful tax increases that Republicans, of course, opposed for the reasons that I just noted. When we had another opportunity to do something about the debt this fall, the President was not particularly helpful or encouraging, often missing in action. He never participated in the process. The plan put forward by the Republican senator from Pennsylvania at the time was the only balanced approach that put significant revenue on the table in the context of pro-growth tax reform. The majority whip called it a breakthrough, but it was never enough for the other side. So here we are, still debating this subject. So much for the President going the extra mile. In conclusion, Mr. President, I'd like to say that the President's budget is more of the same, spending, taxes, and debt that we've seen for the last 3 years. Last year, the budget was so unpopular with the American people that the Senate voted it down 97 to nothing. Not a single member of the President's party voted for his budget. The massive amounts of spending, taxing, and borrowing in his budget will hinder an economic recovery. In times like these, we have to focus on growing our economy, not our government and debt. Mr. President, I notice the absence of a quorum.
Clerk will call the roll.
Mr. Akaka.
The Senate in a quorum call and last few minutes of general speeches. They're going to begin work shortly on the Transportation Projects Bill, which senators hope to have done by the end of the week. There aren't going to be any votes today, but Senate Majority Leader Harry Reid says there will be a number of votes on the bill tomorrow, and he says they hope to finish work on the bill by the end of the week. On the other side of the Capitol, it's relatively quiet this week. The House is out until March 19th, but they will be holding brief pro forma sessions during the break. And later tonight on our Road to the White House political coverage, Rick Santorum and Newt Gingrich will be making an appearance together at a Republican Candidates Forum. That's in Birmingham, Alabama, and we'll have live coverage of the event that starts at 6:30 p.m. Eastern over on our companion network, C-SPAN. And, of course, the Alabama primary is tomorrow. The Senate, in a quorum call, expected to take up the transportation bill. There are 22 amendments pending on the bill, 18 of which CQ's Senate Watch calls germane to the bill. It's a 2-year, $109 billion measure. House Leader John Boehner expects to bring up the Senate bill or something like it in the House. And the House version of the bill, of course, covered 5 years, cost $260 billion. That failed to pass in the House. Also let you know, coming up tonight, more live coverage of the Alabama Republican Party on our road to the White House coverage, hosting a presidential candidates forum with former House Speaker Newt Gingrich and former Pennsylvania Senator Rick Santorum. Their two main rivals, Mitt Romney and Ron Paul, declined to participate. We'll have the presidential candidates forum live from Birmingham's historic Alabama Theater tonight at 6:30. And here on the floor of the Senate in a quorum call expected to take up the transportation bill. There are 22 amendments pending on that bill. It's a 2-year, $109 billion measure. And if it does pass here, it'd go on to the House, where House Leader John Boehner expects to bring up the Senate bill or something like it in the House. Also let you know, Alabama's primary is tomorrow, and later tonight on our Road to the White House political coverage, we'll hear from Rick Santorum and Newt Gingrich at a Republican Candidates Forum that's being held in Birmingham, Alabama. We'll have live coverage of the event starting at 6:30 p.m. That's going to be on our companion network, C-SPAN.